So, did you catch the latest earnings call from Lennar? It feels like the vibe in the home building world just shifted overnight. Oh, absolutely. I was reading the transcript, and by the time they got to the Q&A, the tone went from "here's our plan" to straight up defense mode.
Right. Just a quarter ago, everyone thought, okay, rates are dropping, buyers are coming back. But Q4 2025 had other plans.
Exactly. It turns out the housing market didn't get the memo.
Here's the thing. Lennar expected that easing interest rates would be the magic key. You know, lower rates, fewer incentives needed, better margins.
But that expectation fell apart. Rates did drift lower in Q4, but the buyers, they didn't show up in force.
It's the classic build it and they will come failure. They kept their even flow production going, assuming demand would meet them there.
And when it didn't, they were left holding the bag on incentives.
So why didn't the buyers show up? It wasn't an execution failure on Lennar's part. It was a total industry misread.
It's psychology, not just math. Builders underestimated how tired people are. Inflation fatigue, household debt, economic uncertainty.
Plus the political disruption. It turns out affordability isn't just about the monthly payment number. It's about confidence.
And consumer confidence is still incredibly fragile. That's a hard hurdle to jump.
So, how did Lennar's leadership handle this? Stuart Miller, the co-CEO, basically said, "We're taking the pain."
Yeah, he framed it as a commitment. They are sticking to this even flow production model. They're going to keep building volume to keep their cost structure affordable.
Even if it hurts margins in the short term. He's betting that since the market is structurally undersupplied, they need to keep the machine running.
It's a bold move, accepting margin pain now to be the last man standing when the market turns.
Let's talk numbers because they tell the story. Sales incentives stayed flat at about 14%. That is high.
And gross profit margins slipped to 17%. That's down significantly year over year. And here's the kicker. Lennar actually exceeded their delivery goal for the quarter.
Wait, isn't that good?
Usually, yes. But in this environment, pushing that extra volume actually deteriorated their margins further. It's the cost of keeping that inventory moving.
Looking ahead to 2026, are they slamming on the brakes?
Not slamming, but definitely tapping them. They expect to deliver 85,000 homes next year. That's an increase, but only about 3% growth.
Compared to previous years, that is a slowdown. They used to target double-digit community count growth.
It's a strategic pullback. They need to reset to bolster those margins. But Miller insists they have a moral obligation to keep building because of the national housing shortage.
So if the market is tough, how do they protect the bottom line? Operational efficiency.
This is the boring but important stuff. They've gone asset light. Less than 5% of their land is actually on their balance sheet now.
That frees up so much capital. And they've managed to get construction costs down by about 10% over the last 2 years.
That is massive. If you can't control the sales price, you have to control the build cost. That's their safety net.
They're also speeding up. Cycle time, the time to build a home, is down to 127 days.
But the stat that blew my mind, their customer tech. John Jaffe mentioned their average response time to customer inquiries.
Oh, I saw this. What was it?
42 seconds. Not minutes, seconds. That speed drove a 15% increase in appointments. That is executing at a high level.
It sounds like they are trying to stop being just a builder and start being a tech company.
Exactly. Stuart Miller talked about building an engineering team to transform everything: marketing, warranty, even land acquisition. They call it controlling the controllables. If the market is messy, make your own house impeccable. It's playing the long game, building a high-tech platform so when the market does bounce back, they are miles ahead of the competition.
Finally, is there any help coming from the top, the government?
Surprisingly, yes. There was a lot of optimism about federal housing policy. There are bipartisan bills in the works, like the Road to Housing Act.
It feels like for the first time in forever, Congress actually realizes housing is a massive economic issue.
Miller seems to think so. It's a tough road ahead for 2026, but between operational discipline and potential policy help, Lennar is digging in for the fight.